the position of the retailer is not that good. Even if you look at the consumer confidence data in the US, consumer confidence is going down very quickly. We had the Federal Reserve's interest rate decision. They made some very interesting changes to their predictions for 2025. They reduced the GDP forecast for this year from 2.1% to 1.7%, raised unemployment forecast from 4.3 to 4.4%, raised PCE inflation forecast from 2.5 to 2.7%. That is clearly indicating that they are expecting us. Hello boys and girls, I'm Paris, the options guy, and welcome back to the No BS Trading Podcast. This is episode number 38 and I hope you guys are doing great. And what are we going to talk about this week? So this week we are going to talk about how the Federal Reserve, the US Federal Reserve, didn't change interest rates this week, but they did make some interesting announcements. And by announcements, I mean they did make some interesting changes to their forecasts. And they also said some interesting things. The Federal Reserve Chairman Jerome Powell said some interesting things. So we are going to talk about all of those in today's video. And these have proved to be pretty structural changes, that the things that he's talked about in the story of what is coming in the next few months for the market. So I'm going to talk about that. Then I'm also going to talk about how the Bank of Japan didn't raise interest rates even though their inflation is continuing to move up quickly. So we are going to talk about all of those things, and then we are also going to talk about what are the major events that are coming for the markets in the next week that you should look forward to. And yes, we are also going to talk about is the rally that is happening in the US markets and in the Indian markets that happened in this week, is it a full-fledged recovery which will take us to new all-time highs, or is it just a pullback? So I'm going to talk about all of those in today's video. So this is going to be a pretty important video that you should not miss out. Pretty important episode that you should not miss out. So yes, without any further delay, let's just start with the episode. So talking about what happened in the previous week, first of all, on Monday we had the retail sales data, the US retail sales data, and it came out at 0.2%. Now the expectations were that it would come out at 0.6%. So a very, very bad data point if you compare it with the expectations. So what happened after that? Now this is a bad data point obviously, but it is showing you that the retail sales are going down a lot, and it is not the position of the retailer is not that good, right? Even if you look at the consumer confidence data in the US, consumer confidence is going down very quickly, right? That means people are not that confident about the economy and stuff also. The general retailer is not so confident. And then you also must have seen this very interesting thing that happened in the US this week, and that was that DoorDash partnered up with another financial company. I think their name was Klarna, right? And they are launching buy now, pay later on food deliveries. I mean, I don't understand this. It is just very strange that why do you want buy now pay later on food deliveries? I mean, why is the situation so bad that you want to get buy now pay later on food deliveries? And you might say, okay, maybe the situation might not be so bad and stuff, and they are just doing it to make extra money and stuff. But you have to understand, when you are making such big bold steps, right? If DoorDash has made such steps of launching buy now pay later, they definitely were seeing the demand for such sort of stuff, like buying food on credit. And this really tells you that something is really screwed. The ground situation, the ground reality in the US is not really that good. I mean, if you're getting buy now pay later on your food, that's really messed up in my opinion. So anyways, all of this is telling me that the consumer has still not recovered. And I've been saying this since the last year itself, that the consumer is not doing so great, and even right now the situation has not changed. The consumer is still doing pretty bad in my opinion. And I think this will really translate into the data points very, very fast. All of a sudden, I think what is happening is that the data points are being sort of, you can say, manipulated up to a point where they are being, sort of changed, or, they are being calculated in such ways that the real reality is not being reflected in those data points, and because of that you're not seeing such sort of sad ground realities in the data points. All you're seeing is the overall aggregate. So that this includes the people who are the people in the top 1% who are earning obscene amounts of money, and when they spend, that is also included. And I think, and when the government spends also, right, by taking so much debt, that is also included, and because of that you are seeing so much growth. But what if you exclude all of those and actually look at the ground reality? Then things are not so great. So I think that also cannot be sustained for a long time. So you will see the reality coming up soon. But anyways, what after that? What happened after that? And then on Wednesday, we had the Bank of Japan's interest rate decision and the US Federal Reserve's interest rate decision. So two central banks for interest rate decision. Both of them decided to not change any interest rates. But for both of them, things were pretty good. Pretty interesting, not good. Pretty interesting. So first of all, let's talk about Bank of Japan. They were actually supposed to raise interest rate from 0.5% to 0.75%. That was a good expectation and people were expecting it, but they did not change interest rates. Now, why did they not change interest rates? If you look at the inflation data for Japan that came out this week also, it was still above expected. I think it was like 3.7% inflation, 2.7% inflation. Expectations were 2.5%. Their inflation is continuously moving up, but they are still not increasing interest rates. I think this is happening because they are trying to stabilize the stock market, both the US Federal Reserve and the Bank of Japan. Now, the US Federal Reserve, how they are trying to stabilize and stuff, that you can read on my LinkedIn. I've already written an article, is the US Fed trying to save the US stocks bubble, and you can go and read that article. But same thing for Bank of Japan also. And how did they stabilize the markets by not raising interest rates? Very simple. That is because of the JPY carry trade. Now, JPY carry trade is a huge thing. I mean, trillions of dollars of assets are being backed by the JPY carry trade. Now, if they would have raised interest rates, what that would have done is that it would have done JPY carry trade unwinding. And that means anybody who would have, bought stocks or any sort of risk assets by entering into a JPY carry trade, they would have forced to sell it, right? And because of that, what would have happened is that we would have seen a very bad sell-off in the markets, in the stock market I'm talking about. And I think to sort of stabilize that thing, to sort of not let that thing happen, they decided to delay their interest rate change. Okay, interest rate hike actually. So, I mean, after some point they will need to raise interest rates. They just cannot, sustain this level because their inflation is rising continuously. So they will need to raise interest rates. It's just a matter of when, right? They decided to not raise interest rates right now. Maybe next time on, maybe in the next meeting, they will need to do so. So anyways, after that, we had the Federal Reserve's interest rate decision, and they also did not change interest rates, but they made some very interesting changes to their predictions for 2025. They reduced the GDP forecast for this year from 2.1% to 1.7%. Very big cut, okay? Raised unemployment forecast from 4.3 to 4.4%. Raised PCE inflation forecast from 2.5 to 2.7%. Raised core PCE inflation forecast from 2.5 to 2.8%. That is clearly indicating that they are expecting a stagflation. Now, what is a stagflation? Stagflation is a phenomenon where the economic growth also stops and we also see rising inflation, right? So that is what is being expected by the Fed. And as I said that if the Federal Reserve is cutting interest rates, definitely things will not be so great. You will see rising inflation, and the Fed is finally acknowledging it that we might see rising inflation in 2025. And one more thing happened is that now a total of 4 members of the Federal Reserve's committee don't see an interest rate cut in 2025. And in the December meeting, only one person didn't see, only one member of the committee didn't see any interest rate cuts for 2025. Now, four members see that we might not get any sort of interest rate cuts for 2025. So you have to understand that, and this is also indicating that the Fed is thinking that maybe the inflation is coming back. And I also think that the inflation might be coming back, really honestly speaking, because either two things will happen. Either the inflation will come back, right, and that will be bad for the economy, or the economy worsens so much that the inflation has to fall, right? In both of those cases, things will not be great. So let's see what happens. But yes, that is what happened in the previous week. Many interesting observations. But yeah, let's move on to what is going to happen in the markets next week. Now, talking about what is going to happen in the markets next week, we only have one major event that you need to look forward to, and that is the US GDP data. And that is going to come out on Thursday. Expectations are that US GDP will rise by 2.3%. And I think we might get disappointed with this data point a little bit, especially after the retail sales data came out very bad. I think you might see a little bit of you can say like a contraction in the US GDP. Sorry, not contraction in the growth of the US GDP. So you might get a little disappointed. Now, one thing regarding the US GDP is that the US GDP, 33% of the US GDP is now government spending. Now, what is happening in the US after Trump has taken control is that DOGE, right, the Department of Government Efficiency, is making a lot of spending cuts, right? They are trying to control the spending that the government is doing, and they are doing so very aggressively. So if going forward, let's say they cut the government spending by 3%, right? That would mean a straight up cut in the US GDP by 1%. How? Because, if you see, if they cut government spending by 3%, right, that would mean that 33%, 3% is 1%, right? Because government spending makes up 33%. So of that 33%, if you remove the 3%, right, that means overall 1% of the US GDP will be cut, right? Straight up. So if the Department of Government Efficiency wants to, if it is really going to bring the government deficit in control, the US government deficit, that would mean they will need to make a very big, cut in the government spending, right? And if that happens, that will directly hit the US GDP. And that would mean that going forward, you should not be surprised that the US GDP is falling rapidly, right? It's like if the Department of Government Efficiency continues its work, a recession is a very short probability for US. Because, like as I said, if they cut government spending by 3%, that would mean that there will be a direct cut of 1% in the US GDP. So even if they cut, let's say, US spending by 10%, right, which would be not even close to closing the deficit of the US government, that would mean a straight up cut of 3% in the US GDP, right? So going forward, as I said, that you should not be surprised if we go into a recession very fast, because if the US really wants to control their government spending, a recession is pretty much inevitable, given the current circumstances, because the government spending is really has become a very big contributor of the US GDP. And so if the government spending goes away, the US GDP will also suffer heavily, in my opinion. So let's see what happens. Looking at how Doge is doing, I think saying that a recession will come is like, I don't know, like a 90% probability thing right now. But let's see how things go. I'm not gonna bet on it, obviously. If you want to, maybe you might. But it is a very clear trend of what is really happening in the US. Some things are very clear, and a lot of people are really ignoring it, in my opinion. What Doge is doing, the way they are cutting government spending, right? That is very tremendous, right? And so if they really continue to do that, it will really hit the US government, US GDP heavily, in my opinion, going forward in the next few months. So let's see how that turns out to be. But yes, that was it, about what will happen in the next week. Let's move on to the market analysis and see if the up move that has come in the markets in the last week, is that a pullback or is that a recovery, which will take us to the all-time high. Now talking about what is going to happen in the markets next week, if you see Nifty really bullish this week in the weekly chart, if you see Nifty has made a very good green candle. So does that mean that the market is going to recover from here? I would say wait a little bit. Don't be very hopeful of the market recovering from here. I still think this is a pullback, and I'm going to tell you why. Because let's go back to 2022, right? If you see over here, right, this chart over here, Nifty moved down. Let's measure it over here. Nifty moved down almost, just a second, guys. Yeah, Nifty moved down 12% from its high and then gave a almost like a up move of almost 12% back, right? Almost an up move of 12% back. And what happened after that? Just look at it. Markets again went and made a new low over here, right? Now the second thing over here also, if you see, again markets gave a pullback of 15% on the upside. 15%. But did that mean that a new all-time high came? No. Markets again went down and corrected 16% more from that high. So that is what I've been trying to say, is that currently, if you think that the markets are going to recover again and are going to go back up again, just look at what happened in 2022 and then think about, is the market really going to go to a new all-time high from here? Yes, we might see a pullback over here. We might see more up move from here. But does that mean that we are going to be bullish again? Like completely bullish and, saying that new all-time high is finally possible. We are going to go to 27,000, 28,000. Is that really possible? Do you think about it? I mean, you should think about it, because the way things are really shaping up in the US also, and the the sort of outlook that you are seeing for the economy in the next few months, with regard to so many things, that is really not indicating a lot of growth, right? Even if you see for India, the GDP growth is not really that good. Yes, inflation has come under control, I will give you that, but overall the growth is also not really that good, that warrants a new all-time high again, right? So in my opinion, this is still just a pullback. You should not be in the hopes that Nifty will go back up till 27,000, 28,000. Yes, that might happen, but the probability tells me that we are not really going for a new all-time high over here. This might just be a pullback. And if you really also want to like decide if it is a really an all-time high or not, what happens at higher levels will be much more important. And if you really want to be bullish on the markets, be bullish about 25,000. As of now, don't be very bullish on the markets. I mean, yes, in this pullback, you can be bullish for a short term. Yes, obviously, if you're a trader, but don't be bullish fundamentally. I think this pullback will just result into another down move after this. So what should you do over here in the daily chart? I think the momentum that we've seen this week, that will carry over in the next week also, because when a pullback is happening, it's not really going to like give you an A-shaped fall after this. So if this is a pullback, it's not going to go back down fast from here, right? Nothing like this will happen. Yes, obviously that can happen, but the chances of that happening are pretty low. So what do I think will happen in the markets is that next week you can again see a little bit more bullishness in the market. I think the level that you should look out for is 23,800 to 24,000. And why do I say so is because if the markets go above 23,800, they will take a stop loss of a lot of sellers who would have entered over here. And then if the markets fall from here, that will be a perfect setup for a big fall. So what do I think is that 23,800 to 24,000 should be your level to watch out for. And from here, we can again see weakness coming in the markets. Okay. So as I said, don't be like ultra bullish. And I'm talking about for the medium term right now. For the short term, yes, you can be bullish. looking at things technically, it is looking like markets are pretty bullish. Now markets are at a resistance of 23,400 to 350 over here. So what should you do over here? Very simple, wait for any sort of a pullback in the market and then go ahead and take a long position. Okay, if we are going to, let's say, open flat, right, or with a little bit of a gap up in the markets, wait for a pullback in the market. 23,200 is a very good area, and the second good area is 23,000. Okay, if these two levels do not hold, then we might get a much more, then the third level is 22,800, and 22,800 will also be a very perfect level. Only if we sustain below 22,800, then we will say that yes, the markets can now become bearish again and we can see a new low from here. Okay, but until unless we are above 22,800, you can be bullish on the markets over here. Okay, so yes, as I said, 23,200 first level, 23,000 second level. These are the two levels that you should definitely watch out from where the markets can reverse and continue to move up over here. And then yes, you can easily keep a target of 23,800 on the upside. Talking about bank nifty over here, bank nifty also looking pretty bullish, could not go below this zone, and if you see, just look at the rejection from that zone. So what should you do with bank nifty? Now for bank nifty, 50,000, very good level to take a long position. So if you get a pullback near 50,000, you can go ahead and take a long position easily till the target of 51,600 on the upside. Now bank nifty, if you see, is making a double bottom pattern over here, right? So what I am expecting is that maybe bank nifty might go down once over here to trap all of the buyers who would have entered in this candle, right? In this candle, maybe bank nifty might go down to take the stop loss of all of these people and then start to move up till 51,600. So keep that in mind. I think that is a very good chance of the chances of that happening are very good over here, and then the markets can easily move up till 51,600 and 52,500 on the upside. So this is the market analysis for the next week. As I said again, I think you can get a pullback over here in the markets and you can get a bit of a bullishness, but I would not be ultra bullish on the market, expecting it to hit a new all-time high over here. The fundamentals are really not telling us that this is the right time for that to happen. So let's look at that. But yeah, that is the market analysis for the next week. So yeah guys, that was it for this week, and thank you very much for watching till the end. I really appreciate it, and the sort of support that I've been getting on the content in the last few days has been really good, and I'm really thankful for that. I've started posting on X also, so sort of bite-sized pieces of wisdom that you want on the markets. For that, you can follow me on X. I've been, the thoughts that I've been getting in my mind, that I get in my mind about the markets and stuff, which don't really, I can't really make a reel on them. It would be pointless to put so much effort, but I really want to put them out somewhere. I do so on X. So a lot of things that, won't really be available, a lot of information that I want to share that I won't really post on any other platform will be on X. So do follow me over there. And yes, I hope you guys have a great next week that will happen. But yes, I will see you guys in another week, in another video, in another episode. Bye.